Okay, hello everyone. Good afternoon. How are you doing today? I am Ryan J. McCrary, the CEO and founder of McCrary Financial Solutions. I'm here with a great guest today, a great king, mortgage broker Kareem Baldwin. How you doing today, King?
Doing good, man. We're doing good. Ready to chop it up with the family. So, sure.
Thank you for coming through here. I invited some of my students in here. I don't know if any of them came through yet. We also on Facebook. So before we get started, if people that don't know who you are, if you don't know who this person is, you need to know. But for the people that don't know who you are, just please introduce yourself so we can know, who you are.
Yeah, word. My name's Kareem Baldwin, as Ryan said to you guys before. Mortgage broker out in New York. I've been in the industry now for about 10 years. So I got into the industry through my father and my brother. They were in the mortgage industry. So I was, doing like the teaching thing. I was going to college to be like a history teacher because like science, like history. And as I'm going to school, I picked up like a little, you have like your side job while you're going to college. So I was doing like a little security job. So, I'm feeling good going to school, coming home, making my little like $300 a week. And then my brother and my dad are coming home with like checks 10 times that amount. And I'm like, yo, what are you guys doing? They're like, oh, well, we're doing this, we're doing the mortgage thing. And I'm like, all right, so you guys are pretty much working as hard as I am because I'm going to school, studying, having a second job. So I'm like, you guys are pretty much doing what I'm doing. You're able to control your own hours. I'm waking up at 6:30 to rush and do everything, and then kind of waking up at 9 and going into the office whenever they want to, kind of making their own schedule, just being independent. So I'm like, you know what? I don't think the school thing is going to work out for me when I see, what these guys are doing, the kind of the power of their time with freedom and being able to move and shake a certain way. So that brought me into the business. I'm 10 years in now, and pretty much, the rest is history. Just got in from them doing it and letting me see how you can kind of use that money from the mortgages to kind of do other things, fund other investments. So that's why I got into it. Plus to, let the community know different do's and don'ts, certain programs that, if you walk into Wells Fargo, if you walk into Bank of America, they're just not going to tell you this information. We see it all the time where, the banks are being fined. They're giving, I don't know if they want to say minority or whatever term they want to use. That's Black people. They're giving them high interest rates and not explaining the documents to them correctly. So that also is why I'm in it too, to kind of let people know the real deal, what to look for, how to do your own research, understanding certain mortgage terms. Because when you're speaking to a mortgage officer, a real estate agent, they're going to use mortgage terms, mortgage jargon, so to speak. And you don't know what they're talking about. You're just like, oh, okay, that sounds good, but you don't know what it means. So you're signing paperwork and not understanding what's going on. So it's very important that, when people like me and you, we get the information. It's very important that we give it out the correct way and, not just doing things for a buck. Of course, in financial industry, when you have your own business, of course, the money's there. It's very lucrative industry, but there's other things besides just the money side to it.
And yeah, let's touch on that for a minute. So, what are some things you can share? Some tips, like if you're going into Wells Fargo or Bank of America or someone else to get a mortgage, like what are some, I guess, basic tips that you said they probably won't tell you when they're trying to get you to, get this mortgage or trying to get some money in their pocket? What are some basic things, I guess, people should know that they usually don't tell you when you walk in there?
Well, what I would say the first thing to do is whatever documents, whatever things you get from them, I wouldn't sign anything that day. So the first thing you want to do is when you go in there is don't sign anything that day. So they say, hey, just sign up now, leave a deposit. You know what? Let me just get the paperwork, bring it home, and then kind of do your own research on the paperwork. The internet's your friend now with Google and the million other search engines. You can easily take a sentence from the mortgage document that you don't understand, type that in, and you'll pretty much get, thousands of pages on, what this means and other things like that. So I wouldn't sign anything right away. And I would just have them explain things as detailed as possible. Hey, I don't understand what that word means. Just, tell it to me again. What are the real interest rates, and just kind of find out just keep asking questions. That's pretty much the best way. You just have to keep asking questions, because if you just go in there, you might, everyone's a mark, so to speak. So it's just, who's going to go in there and say, okay, well, I did some research before I went into Wells Fargo. I didn't. I would say do at least the basic research before you go in there. So at least you kind of understand, something. I'm not saying that you're not going to know everything, but at least do some basic research, kind of understanding what a mortgage is, understanding what interest rates are, and just doing that basic stuff, like what a mortgage. If you Google what a mortgage is, it'll kind of tell you what it is, so you can kind of know, that type of stuff. And also you want to let them know, hey, talk to me about the grant programs. Talk to me about, any government assistance programs that you guys have. Talk to me about that, because what they'll do is they won't. And then, when Elizabeth Berkowitz comes in, she'll get all the information about every grant and everything. Hey, there's free money coming out for nurses. There's money for firefighters. So there's so many government grants available for housing, whether you're a firefighter, law enforcement, nursing, teaching. So there's so many programs. But if you don't know and you just go in there and you say, hey, I have 20% down, they're going to say, all right, give me your 20%. Meanwhile, you could have put down 3%, got a grant to cover the rest. So you definitely want to just find out what all the grants and any state-specific programs they have. So these grants vary by state. So a grant in New York may be completely different than, California or Florida or, Pennsylvania. So it's definitely something that's state-specific. And you can also Google the grants in your neighborhood. If you search, Google housing grant, first-time home buyer grant, and you put your city, you'll definitely get some information that way as well.
That's great. You're dropping a lot of very, very important information. The first thing is, number one, don't sign anything right away. When you go in there, people don't realize is we have the power. And once you recognize your power, then you have a lot of leverage. So if you go in there and not, with the in your mind, like, I'm not going to sign anything, I want to go and get some information. Like you said, keep on asking questions. But at the end of the day, I'm not ready to sign on that dotted line today. That gives you a lot of leverage and a lot of power, because they want to get that sale. They want to do whatever they can. Like, you want some water, or you want some coffee, or you want us to offer you this or that and make you comfortable to get you to sign. But once you realize, like, no matter what happens today, I'm not going to leave with signing a piece of paper. That's when you have a lot of power and you have a lot of leverage.
Yes. Also to add.
Yeah, go ahead. Yeah.
I was thinking, talk about leverage too. If you have, let's say you have someone that or, you're more interested in buying a house, and you may have a friend or a coworker that's interested as well, I would say you guys may want to set up your appointments back to back. And when you go to the bank or you're dealing with me, say, hey, Kareem, I'm looking to buy a house and I have my friend too that's interested. I need you to hook us both up. I need you to kind of, work some numbers, and I'm giving you a referral, an additional sale right there. So of course, now I'm saying, you know what, that fee may be $500, for example, but because you brought someone in and they're motivated as well, I might waive that for you because you brought that other person in. So it's very important to reach out to your network as well. So if you have 2 or 3 people that you guys are saying, hey, we're interested in buying homes, you guys may want to work together on that transaction and kind of work with one mortgage professional and one real estate professional to guarantee that you guys get some type of group savings, because other groups do that as well. When they have 4 or 5 people that are buying houses, they all work with the same person, and they use that to kind of get incentives, whether it's mortgages. I know people that do that in the food industry, in the bar industry, when they say, okay, we're only going to get our alcohol from one distributor and it's 10 of us, and he knows that, hey, those bottle prices, they have to be correct. It's just like the mortgage thing. Those fees on the loan and those interest rates on the loan, they have to be correct, because we have 4 transactions. People will kind of do a lot for that business because it's multiple deals. It's not just one person. It's 3 or 4, 5, 6. So if you have a big network of people, you definitely want to reach out to them and use that to your advantage.
Okay, and I see we getting a lot of likes, a lot of hearts on Facebook. So if you just jumped on Facebook, I'm talking to Kareem Baldwin. He's an expert.
Are you doing like a question box there too, or what?
Yeah, we got some questions in there with some comments. We see Yolanda's on here, of course. We got on here, of course, Andre Hatchett, my main man.
Andre, what's good?
Justin on here, peace. Also, if y'all have questions, Carmen Mohan's on here, Black Excellence hashtag. If y'all have any questions, please drop them in the chat right now. You're getting thousands of dollars worth of game for free 99 right now. So if you have questions about getting a mortgage, what you should look for to get a mortgage, anything about, real estate industry, mortgage in general, please feel free to drop them in. Before we move forward, how can people contact you if they do want to, talk to you one-on-one or see all the services that you provide, and also give people all the services that you provide?
Yeah, I'll give out my cell phone number. They can send me a text at 631-394-7640. Plus, if they go to my website, it's intheknowmortgage.com, intheknowmortgage.com. You can go on there and kind of fill out your contact information, and they'll send me an email to kind of reach out to you, or my Facebook, Kareem Baldwin, my Instagram, KB_in-the-know-mortgage. So you can send me a message, send me a text, and then we can kind of work together that way. Go on the website. So I kind of have a renter secret book that I wrote, kind of about 30 pages, giving out different secrets to renters, certain things the banks look for. So if anyone's interested in getting that, just send me a text and I will email you that book. I was charging $30 for it, but for Ryan's people, I'll, waive the fee. So just send me a text and I will get that book to you emailed free of charge.
Okay, great. So one question we have, do you suggest a person get a mortgage in their business name if they own a business? What are the pros and cons of that?
So for your business, I would say that you would be using that when they're talking about real estate investing. That's the only way I would put a mortgage in the business name, is you were doing some type of real estate investing. There's really no cons to real estate investing as far as unless you want to do your market research, other things like that. But I would say if you have a business that you want to start buying properties with, then the real estate investing would be a great way to go. I do have a lot of products from that. That's what I was going to touch base on, how you can get started in real estate investing. You don't need, 30% down like everyone's saying. You don't need a bunch of money. So if you have 10, 15,000 and you want to get started, then you're good to go. I'm sure there's products with lower amounts. I see a lot of homes for, 20,000, 10,000. People are buying, homes at auctions for pennies on the dollar. We can do stuff with those as well, because you will need to renovate those to sell them or renovate them to rent them out. So we do have programs available for that as well. But as far back to that person's question, if you have a business, I would say you want to set up a specific real estate investment business or an LLC specifically for real estate. So you don't want to kind of mix up your other business with your real estate tax returns. You want to keep those things separate. So, but if you have one big LLC, then of course you can kind of do DBAs and do other things with that way. So you definitely want to separate them however way you want to do that, whether it's with a DBA or you want to open up a brand new LLC.
Absolutely. And also, if you're watching on Facebook, if you haven't shared already, please share this information. Share it on your personal page, your business page, and your Facebook group. You can share it on Instagram, YouTube, Twitter, wherever you at. We need to share this information. We need to get this information out to the people. So let's talk about real estate investing. I mean, like I said before we got live, I haven't dipped and dabbled into real estate heavy yet. It's definitely coming, definitely going to be added to my many other things in the portfolio. Me right now, of course, everybody knows I like stocks and bonds and mutual funds and ETFs and everything in the whole stock market world. Now I've been doing a lot of digital marketing, online marketing, making money online and stuff like that. And then the third piece of the puzzle will be my real estate portfolio. But let's talk about, the importance of having real estate in your portfolio, owning property, owning assets. And that's just a great great vehicle to just build wealth.
You're frozen.
Can you hear me now?
Yeah, you're good. You're good.
Okay. Did you hear the last of the question?
I heard talk about importance of real estate investing, and then I didn't hear the last part.
Okay. Yeah, just talk about like real estate investing as a vehicle to build wealth, own assets, its own property, and just how important that is that we have to be property owners, especially black folks and just wanting to get ahead and just wanting to own assets, just the importance of real estate investing.
Yeah, so everyone knows that, investments are important. It's kind of, you see it every day, everywhere you go, how important it is to invest, how important it is, to own real estate. And it doesn't matter what city, if you live in a major city right now, especially if you live in New York, Philly, Florida, Georgia, Atlanta, Los Angeles, Sacramento, San Jose, San Francisco, any Tennessee, any major city right now in America, if you walk outside that major city, you're going to see cranes up. You're going to see,
Crazy.
Construction all over the country.
Crazy.
All 50
Philly
states.
is crazy. They're just
walking
crazy.
just walking outside, taking a stroll on a Sunday, you can see the importance of real estate because everyone else is getting a piece of the pie. It's just, when are you going to jump in and get yours? So we can sit here and, talk for 3 hours about why it's important to have real estate, but everyone already knows that. We don't have to.
That's true.
We already know the importance of it, why it's mandatory. It's just, are you going to do it or are you not going to do it? So that's pretty much what I have to say on that. Now, as far as the money wise, so a lot of people that want to get into real estate investing, they do something that's called wholesaling. So basically what wholesaling is that you're basically just trading contracts, so to speak. So let's say you find a house that's worth 30,000, and so you find that house worth 30,000. You then have a buyer. So again, you don't have to buy that house. You found the inventory that said 30,000. So now whatever, you're tapping into your network. You may have real estate investors that and they may say, hey, Ryan, I see you had a property on there for 30, but they're going to say, no, that property, I need you to give that to me for 50. So now you don't have any money on your own, but because you were kind of trading the contracts, you sold them something, so to speak, for 50,000, and it was only for 30, but because you brought them the deal, so to speak, they're going to kind of pay you a finder's fee. That's usually how people get into wholesaling. You don't need a real estate license for that. You don't really need too much to get into that side. So you see a lot of people doing that. Hey, buying real estate without putting up any of your own money. That's called wholesaling. I don't really get into that side. I'm not knocking it. There's nothing wrong with it. If you have a network of real estate investors and you wanted that as a way to get started, saying, hey, you know what? I'm going to get my real estate license, but I don't have it yet. So this is what I'm going to use in the meantime. Hey, I want to get my money up. Let me kind of do a couple wholesale deals. I may make 5,000 on a wholesale deal, 10,000. Let me get 4 or 5 of those under my belt. Now I may have a 30, 40,000 saved up because I did those smaller deals. And now I can kind of get into the bigger stuff. So there's nothing against doing the wholesaling. It's just that you definitely want to do your research. I read what's called the Real Estate Wholesale Bible. So it's on Amazon, cost me about $10. So you read that, kind of gives you the ins and outs of it. So I would definitely tell people to kind of do your own research. I wouldn't pay the whole $10,000 class that someone may tell you to sign up for to tell you to do the same thing that book is going to tell you. So mentorship is important. It's just that who your mentors are going to be. So I wouldn't just go on Facebook and see the Facebook ads for real estate wholesaling and then just pay that person. So I would just tap into your network, reach out to your real estate investors and kind of pick their brain about it as well. Like, hey, man, I want to get into wholesaling. I want to do some business with you. Kind of what are some ins and outs? Give me some of the ropes. I bought a book. I read a few books. I did my own research on my own. So I kind of wanted to pick your brain about it as well. And if you just use your network, that will save you a lot of time and save you a lot of money as well.
Mm-hmm. Your network is your net worth.
Yes.
So we got a couple other questions. DeAndrea says, what are the requirements for a DBA?
It's state specific. So if you have an accountant, you have a CPA, you definitely want to reach out to them and say, hey, I have a corporation. So I would say based on what I know is that you definitely need a corporate structure for your business, whether that's an LLC, S corp, C corp, whatever it is. You have to have that business structure, and then all you do is file with the state. You're kind of doing business as another name. So you have McCrary Financial Solutions LLC. A DBA of McCrary Financial Solutions may be McCrary Properties or McCrary Investments. So it's all under that financial solution umbrella. It's just that he has different entities of that financial solution umbrella. So the first step will be to set up your LLC, and then you can kind of have different branches of that LLC. But you definitely want to set that up first. So if you don't have one of those, then there's really the DBA stuff won't apply. You need to get the corporate structure first, and then you can have certain entities of that. So I wouldn't go on LegalZoom. I would, every person should be working with an accountant, should be working with a CPA. They will know everything on that, all the legal advice. I'm not an accountant, so I don't want to give someone legal advice and then the IRS comes and they say, hey, you told me to do this. So you definitely want to consult with your accountant, because again, things are state specific when we're talking about setting up corporations. But whoever you use for your LLC, then talk to them about the same thing. Hey, this is my goal of having this corporate structure. So you definitely want to find out what your goals are. Don't just do a DBA because we're talking about it and the initials sound cool. Just, find out what you want your structure to be. So, hey, I want to have credit repair on one side. I want to, offer mortgages on one side. I want to offer real estate on the other side. I want to offer investment. So you kind of want to have what your goals are with that corporate structure, and then you can kind of position yourself better on, okay, I want to call my financial entity this. I want to call my credit repair entity that. I want to call my real estate entity this. So once you're able to have that structure of your goals and what you want to do, then setting the other stuff up will be pretty simple.
Absolutely. So that's the importance of having those entities. If you don't know what DBA
and means, you have the write-offs and everything like that.
It's like you said, you got to have that first. You got to have that parent company first, and then you can have the other entities or properties or investments, whatever it may be. But setting up that entity first just gives you all the benefits of being a business owner. People that aren't business owners, they don't understand the benefits.
And even when you're talking about being a business owner,
go ahead.
Yes, and a big benefit of being an owner of a business and having a corporate structure with an LLC, S corp, C corp. When you separate the two, now when you come get a mortgage, we're going to look at your business returns. We're going to look at your personal returns. But then you're going to have, let's say you have a car loan, or you have certain credit cards that you have your car loan that's on your personal credit for your car, but then you pay that car through your business. So since you pay that car through your business, we don't have to account for that car payment in your income. So now if you have a $400 car payment, $500 car payment, that may be stopping you from qualifying if you don't have a business. But then now if you have a business and you're paying that car with your business, now that's over. We're not worrying about that anymore. So that $500 payment or $600 payment, you have credit cards that equal $1,000 a month, you can pretty much wipe out all your personal debt through your business to qualify for a mortgage. So now if you say, okay, I have $3,000 a month in expenses that's on my personal credit, but I pay that through my business. Since you pay that through your business, that $3,000 a month, that goes away. So now you look like a rock star. So there's definitely the reasons why people do that, because in banking, we look at them as two separate entities by saying, okay, well, yes, it's on his personal credit, but that's for the business. You can't hit him for that payment. You can't deduct that from his income because it's a business expense. It's not a personal expense. Even though it's on his personal credit, it's a business expense. So you can use that as a way to help yourself qualify. Because I see a lot of self-employed people are not doing that. I'm like, wait, you're not paying your car and all your credit cards to your business? No. Okay, why not? Because now when you want to get a property, you can kind of use that as a way to increase your income. So definitely so many different ways to do it, but that's one tidbit for my self-employed people. You definitely want to start paying your things through your business right away. We want to see you doing that for at least a year. So it's very important that if you didn't start doing that yet, then, the first of the month is coming up. You got 2 or 3 days to kind of add all the payments on there. Excuse me. You have 2 or 3 days to add all those payments into your business account now. So now, if you want to start, now is the time. It's the end of November. All those December bills, you got to start paying those in the next couple of days anyway. So now is the time to set up your automatic debits from your business account, because it may take a day or two to do that. So if you start that today, by Friday or Tuesday, before that 5th of the month, when late payments start coming in with late fees, you can have all your stuff set up. So you definitely want to start doing that today.
Start doing that today.
Watch this first, though. Don't do it.
Yeah. Watch this first, then do it today.
After you get off the call, then you go do that. But definitely watch this first. So yeah, it's very important. You're self-employed, you have a business, or even if you have a business, you have a regular job, it's very important to start making those payments through your business account.
Jules, you sure you're not an accountant? Because you're dropping some jewels as well.
I want to tell people I like doing my own research. So when I go to these accounts, when I go to these people, I kind of understand what they're saying. So I don't want to go in there blinded, because again, professionals, people make mistakes. I may tell you some information that may be incorrect, but people make mistakes. No one's 100% right all the time. So if you're doing your own research, you may catch some things here and there. That's why it's very important to do your own research, regardless of what I'm telling you, regardless of what Ryan's going to tell you. Yes, we're experts in our field. We put years and a lot of hours, and thousands of hours, tens of years. But again, mistakes happen. No one's perfect. So the importance of doing your own research is definitely up there. It's really high.
Absolutely. So if you just jumped on and you haven't shared already, you don't know who I'm talking to. I'm talking to Kareem Baldwin. He is a mortgage broker, over 10 years experience, and he's dropping jewels. Curtis says nuggets. Man, people pay thousands for this info.
Right.
Absolutely. Monique says you can lease your own personal property to your LLC. She said yes for dropping jewels. A lot of other people are jumping on. Please share this information. Another question I have for you is, like, with real estate, I see a lot of people, I guess, maybe trying to like get in and get rich quick. Like, what's your take on the people that just want to get into real estate and just make fast money? I know you can make fast money in real estate, but people that I know usually say, if you hold a property for at least 10 years, you'll definitely make money. Try to play the long-term game. But just what's your perspective on like people that just try to get in and get rich quick and try to, just get that fast money in real estate?
Well, if you want to, I don't really know if there's such thing as fast money in real estate, but if you want to, do it where you're not taking years to recoup your costs, that's where the fixing and the flipping of the homes come in. So if you do it that way, that's a way to kind of get some things under your belt. But an important aspect of fixing and flipping is that you may buy a house, fix it, put it on the market to flip, but you may have to hold it for a couple months. You may not, have a buyer for that property. So if you're going to you want to pick those certain markets, doing your research on the neighborhoods and the areas of, driving around, talking to the local town, talking to the local politicians, because they're going to let you know, hey, we're bringing some grants here. We're bringing some energy grants, or we're bringing some grants to try to increase job creation in this area. So if you reach out to the local politicians in areas, they'll kind of let you know what's going on, or check out the town's website. The town's website will let you know, hey, in 5 years, we just passed the bill for the next 10 years, we're going to be investing in here. So now, if you're looking at it, then that would be the time to get something done. So for example, I'll use myself. So about 2 years now, it's been 2 years, I bought a property in Connecticut, in Bridgeport. This is like the hood of Connecticut. Bridgeport's the hood. Everybody knows the hood. So when I was doing research in areas, I was saying, okay, New York, Brooklyn, Queens, Bronx, gentrified. It's done. You're not buying it. You don't have $400,000. It's just not going to happen for you. You're going to buy something for $300,000. Yes, you'll be able to make $100,000 quick on that, but you're going to have to put up a lot more money. So I'm like, okay, well, don't really want to do that yet. Let me start in a smaller market just because I'm getting my feet wet as well. So for me to jump in and at the highest market, which would be, in New York or Bronx, New York City, so to speak, for me to jump in at the height of that, where it's moving, there's a lot of experts. I'm not really an expert in the real estate flipping yet or holding properties. So let me look for other areas that other people really aren't going into yet. So I can kind of, get my feet wet, learn the ropes. So started doing research. I thought about Connecticut because, I'm in New York, and a lot of people that work in the city, they live in Connecticut because it's not too far. It's about a half-hour drive. You have all the public transportation right there. So I'm like, okay, this could be an area. Let me now do my research. So as I'm doing research online, I go on the town's website, and the town is saying, hey, we just passed a new legislature, a new policy that says that, we're building a strip mall. We're bringing green energy jobs to Bridgeport in the next 10 years. So they're not gonna start building it until about 2021.
Gentrification is coming though. It's coming though.
Once I saw that, I said, okay, you know what? This may be it. So I drove around the area, talked to a couple people around. I was able to find a property in a college town right by the University of Bridgeport that was going for pennies on the dollar, dirt cheap. And I used that as my startup. So I said, okay, New York, cost in New York is much higher. Cost in Connecticut is not as high. So even obtaining that property was a lot cheaper for me. Plus I could do my own loan, so to speak. So I didn't have to worry about paying for like mortgage fees and stuff like that. Yeah, so I didn't have to worry about paying for real estate fees because, like I said, my wife's an agent. So she kind of worked with the Connecticut agent on finding the property. So that's how it worked out. So I would say that because I did all my research, because I checked with the local town, I researched the area, I researched what other people were charging for their rents. I looked at other properties to see what was inside of the home. So I'm like, okay, this doesn't have any like stainless steel appliances. There's nothing in here. And college kids are paying $900 a month to $1,000 a month in rent. And you're not giving them any bells and whistles. So I'm like, okay, well, if I can buy this now, keep the lower income college kids in there, rent it out. Once they start bringing in that working class, then I know, okay, college kids, you guys got to go. I need to now put some money into it, fix it up as much as I can. And then now I can bring in that working class, that six-figure class that's going to be in there. They're just not in there now, but that's fine. I'll have no problem eating small because then I know the big piece of the pie, it's coming. But you just have to look into the future. So when you're talking about getting rich quick, it's not going to happen. Are you going to have a couple deals where you made some money on right away? Absolutely. But it takes years to get that experience. No one's going to, like, I know a lot of people follow Jay Morrison.
Yeah.
Dude, killing the game, but he has years and years of experience on doing all this stuff. So when you get the game from guys like that, you can kind of jumpstart your process. So it's definitely important that you do the research, which is what he says, because I've listened to his stuff before, and it's because he's been in it so long, he can kind of see what's out there. And a lot of his stuff too, people bring the deals to him so he can kind of help him structure it. Because it's a lot. You miscalculate something, you could be out thousands of dollars. You have the wrong contractor, you could be out a lot of money from that stuff. So when you have a get rich quick mindset, that's not the mindset to have. Being excited to make money, that's the mindset that I would say. Instead of getting rich quick, I would say, how can I start making money today? So if you have that mindset, you'll want to soak up all the energy and soak up all the game right away so you can just get on it as quick as possible, because it may take you some time to learn it. Different people learn at different speeds and different paces. So the faster you get started, the faster you can start seeing the benefits, so to speak.
You dropping so many jewels. I'm just sitting here listening, like dropping so many jewels, like seriously.
We could talk on here for hours, man. It's so much. We could talk in here for hours, but I want to get specific into some like products, so to speak. So
yeah, definitely.
All right. So we talked about real estate investing. Just so people know, if you wanted to not buy a house to flip or not buy a house like that. We're talking about credit scores at like 580. So we're not talking, you need the best credit in the world. So you have a 580 credit score, most likely you can buy a house. You have a couple $1,000s, and I'm not saying you need a lot of money.
Yeah, but
like we talked in the beginning, there's housing grants. So for the housing grants, they want you to have at least a credit score of like 620, 640 for a house.
Yeah, you bet.
640 to get. In New York, they have 30,000. So in New York, you're talking about someone's going to give you $60,000 to buy a house. 60, not 5,000, not
Uh-oh. Looks like Kareem might have froze. Hopefully it comes back in. Kareem, you still there? Oh, looks like he might have dropped off. Hopefully he will come right back in. There you go. You back?
Good?
Yeah, you good. Keep going.
Yeah, like I was saying, is that they're giving out 60,000 in New York State for a 2-family home. For a single-family home, they're giving out 30,000. You just have to make like under 70,000 for one person, which most people in the corporate world, they're making about 60, 70 anyway. If they just got started or they've been there for a couple years, which the younger generation, like our late 20s, early 30s range, you have a regular job, you're making 50 to 70,000. Let's just be real. You're not
Be real.
at that just getting started in the corporate world. It's just not going to happen.
And that's important. But yeah, definitely explain the products. But that's important because with income tax season coming up, and I see this every year, people get 5, 10, 12, sometimes $12,000, and they don't buy any property. I'm like, what are you doing? Like, you know what I mean? Like, I've never had an income tax. Like, I know people with kids too, claiming 2, 3, 4 kids, and they getting 10 to 15,000. Like, I never got nothing like that for income tax. The most I got was like a couple of grand, 4 grand before, but I never got anything with like 10, 15 grand. And I see people doing that, just not buying property. And like you said, if all you need is at least a 580 credit score, which anybody can get, I think, and then maybe have a couple for maybe 5 grand and just put down, you can go buy a piece of property and you can own a property, but it's all about the mindset. I just wanted to drop that in because income tax is coming up and people are going to be getting a lot of money. A lot of money. And
Christmas season.
Christmas season, all that. But yeah,
billions of dollars are about to be spent. If it didn't start on Friday, it's definitely starting today, Monday, Friday. So we know that's going to happen. So I was saying, I would just tell people, if you have a long list of people on your list, because this is what I do now. I just don't spend a lot of money on Christmas because I just don't do it. I'm like, yo, man, I want to get you a gift. You want to get me a gift. We got to hit the $25 limit. And let's just do it that way. I've known you for 10 years. Ain't nothing that you're going to buy me that I'm not going to buy for myself anyways. So,
exactly.
You know what I'm saying? I appreciate you wanting to get me a gift, but whatever I was going to get, I would get it for myself anyway. So don't go crazy. Let's spend that $25 limit. And then, that'll be a good way just to save your money. Because I see a lot of people that don't really make a lot of money. They go crazy on the holidays and they spend all their money. And then January comes and then they're behind. So when tax season comes, all they're doing is catching up. A lot of people are using tax season to catch up instead of using that money as a jump start.
And that's just your money that they just giving back to you. Really.
Basically.
It's really
just you're getting a small
amount back. Exactly.
Yeah. Especially now with this new tax plan coming in, that's going to change a lot of people's income tax as well. So don't think that, I'm going to go crazy now and charge up all these cards and then a new tax plan is coming. It's literally right there. And that's going to hit us the hardest. So a lot of single women claiming kids, that's going to be dead soon. So you're not going to be able to claim as much kids or get as much money you want when you claim those kids. So the old ways of doing things, those days are over. So it's very important that you see what's going on, like we talked about before, doing your research and then using that to your advantage. So 580 credit score to buy a home, 3.5% down. Let's say you have great credit, over a 700 credit score. You need 1% down. So we're talking about pennies on the dollar here to buy a house. 1% down. If you're buying a house for 300,000, you need $3,000 to secure the mortgage. There's nothing else for us to talk about at this point. All the programs are there. It's just, when are you going to do it? When are you going to take advantage? Because it's not changing. Other groups are just jumping on it. I work in my office. We have a mixed ethnicity office. You see a bunch of different people in here, and everybody has their groups of people just coming in like hotcakes, taking advantage. Me, I work with a lot of different groups of people. Work, of course, a lot of Black people, but I work with a lot of other races of people, and they're in here taking advantage of these programs. They're not sleeping, playing games, and not, let's turn up. They're like, you know what? I need $5,000. I'm gonna get this $5,000, and I'm gonna come back and see you in a month. I'm like, all right, cool. Example, I did a seminar with Andre last year. A lot of people on it, good calls. So many people hit me up from that. Hey, man, it's the end of the year. Let's set myself up for tax season. So spoke to a lot of people, set them up. This is what you got to do. Only like 2 people ended up calling me back and saying, hey, I'm ready to buy a house. And I spoke to hundreds of people. Only like 2 of them was like, you know what? I'm going to do something. And we did something. They were happy. They were like, yes, I stuck to the plan. But a lot of us just don't stick to the plan. It only sounds good. Owning real estate, having money, it sounds good. It's a great thing, but actually doing it is something completely different. It sounds good, to have your own LLC, to have your business and be financially free. That sounds great. But then actually putting in the work, it's a completely different story. You just get a completely different mindset. But all right, so we spoke about the credit score, 580, 700 credit score, 1% down. We're talking about buying multifamily properties. Same thing, 3.5% down. Also, if you're buying a multifamily property, I'm just going to run through these as quick as possible. If you're buying a multifamily property, let's say you're buying a 2-family house. Of course, you're going to live in one unit. You're going to rent the other unit. Let's say that other unit gets $1,000 a month. You make $50,000 a year. When you come to me to qualify, I'm going to give you that $1,000 a month income, even though it's not rented yet. They let you use your proposed income. So now instead of you making $50,000 a year, I'm going to give you the $12,000 from that rent. So now you make $62,000 a year. So your qualification box, it could jump up. It could put you in a different box. I have people buying 3 and 4 families that make $20,000 a year, $30,000 a year. But because they have 3 units that get $1,000, now their rental income is more money than their regular job income. So it's crazy. It's like, okay. They're like, I don't make a lot. I'm like, all right, well, if you don't make that much, then you got to look into the 3 and the 4 family so we can use that rental income to help you qualify. So you can use the rental income to qualify. That's a big thing that we're doing now. A lot of people are doing that, especially in Jersey. The hot markets right now are Jersey and New York. A lot of people going to Newark. A lot of people going to Jersey City. A lot of people going to Bronx, Yonkers, Staten Island. A lot of people are in Philly. A lot of people going to Florida, Jacksonville. A lot of people going to Atlanta. A lot of people going to Nashville. So there's so many areas where Connecticut, Bridgeport, for example. Bridgeport still has that house. That was a 4-family. We bought that for $110,000. So the mortgage payment on that is under $1,000, and it's being rented for each unit's bringing in $1,000 a month. And that's on the low end. Once I fix it up, I could probably get $2,000 a month once it's gentrified. So you could just do the math on that. And that's one property. So if you're talking about you have 10 of those, 15 of those, that's how the money really starts coming in. That's on one. And I'm only one person. So there's other guys that have full portfolios. Hey, man, I have 100 properties. I have 50 properties. So it's there. You just don't need a lot. So multifamily, you can use your rental income to qualify. My student loan people, we know a lot of our people have student loans, a lot of them, so to speak. So with the student loans, they're going to hit you for 1% of your balance. So you have a lot of student loans, just add up your student loans and hit 1%. That's what we're going to use to take away from your income. The only way around that is if you have to work with the student loan company and say, hey, my student loans are deferred. Deferred student loans don't matter anymore. Even if it's deferred, we still have to account for that payment because it's not going to be deferred forever. So what you want to do is if you have student loan payments deferred, you want to work with them and say, hey, my payments are deferred now, but if I wanted to make a payment today, what will my payment do? And they may say, you know what, your payment will be zero. Get a letter from them stating that $0 a month, and then I can use that zero. So instead of hitting you for the 1%, I'm going to use zero because you have paperwork from the student loan. So you definitely want to make sure that you have all your documents in order, because once we're assuming things, we're going to assume the worst. I'm just going to assume the worst. I have to do that. I have to assume the worst. If I don't see a payment on there, I have to hit you for that 1%. So if you talk to the student loan company and you get something that says $10 a month and I have to use $300, I'm going to use the $10 a month because you provided the proper documents. You're just not sitting back and waiting. So all my student loan people, if you want to buy a house, it's very important that you talk to the student loan companies today. Again, watch this. Call student loan company.
Oh, yeah. Watch this first.
Watch this. Call your CPA and accountant to get your business structure set up, and then call the student loan company and find out, what your payment options will be, and start getting on that right away. Because the longer you wait, you don't know when programs are going to change. When you're paying attention to the news, the president's talking about gutting the financial protection and getting rid of all these rules and regulations that are important to our industry. So if he gets rid of that stuff, we're going to go back to that free-for-all day of, all you have to do is just say you have a job and we write the income in. So I see those days coming back, not as much, but on a lower level. Really? So if you're preparing yourself now by focusing on your credit. So what I see the difference now is that when it happened before in the heyday, before the housing crash, credit score didn't matter. You could have a 580, 0% down, nothing, and you just don't worry about your income, don't worry about your down payment, you just go with the house. I think what they're going to change it to now is that they're going to want your credit scores to be higher. They're going to say, okay, you have a 740 credit score, you have a 720 credit score, and you haven't been late on anything for a year, then you're eligible for that program. So making sure that your credit's in order, making sure that you're paying all your bills on time, that's what you should work. That's what you should focus on now. So all your Christmas money that you're going to get, use that to pay your bills off. Use that money to kind of get yourself started, because the changes to the mortgage programs, it's coming, and they're going to start loosening everything up again. And when they start doing that, we have to be ready to take advantage of it. We have to be ready. So now what Wall Street likes now is they like the fix and flip loans, because they don't know what Trump's going to do. They don't know what changes are coming. So for them now, they're saying, okay, we need to make sure that we're lending to people that want to get into the real estate investing. That's what I was talking about before. So one of the programs that I have is that you can buy a property for 10% down, regardless of the price, and we'll give you 100% of your repair costs. So if you buy a house for $100,000 and it needs $50,000 to get rehab, so you buy a house for $100,000, you got to put down the 10%. So you put down the $10,000 and you say, hey, I'm going to put $50,000 into this house to renovate it. We'll give you all of the money to make the repairs. Usually they'll give you 20, they'll give you 80% of the repairs, they'll give you 70% of the repairs. Certain times they'll give you 60% of the repairs. But Wall Street's loving the real estate investment loans so much that they're like, you know what? We'll give you 100% of your repairs. That's unheard of. Flipping a house and getting all the money you need for your renovations. Someone's going to give you that money and you don't have to front it. So the 10 grand, you can get that house and get it ready. Now is the time to get into the real estate investing if you want to do it. And this program I'm talking about, it's all 50 states. Minimum loan, $75,000. I don't really want to go lower than that, but I will if it makes sense. If you say, okay, I have 3 properties that I want to do this. This is just the first one. That's what we talked about that before, how using your network to your advantage. if you say, okay, I'm on a lower level, I'm starting at $20,000 properties and $30,000 properties. If you come to me with you and two other people and you have 4 or 5 properties that you want to get done, yes, it's under my minimum that I'll lend, but I'll do it for you because I know you have more business coming in. I know you're just getting started. I know you have, you know what, if I give him this 50 grand now to flip this 3 houses, then he's only going to move himself up, him or her. So I'm saying him, but this is not discriminating against the females or anything like that. You know,
We love the queens.
don't email us about that. You know, this is for women as well. So, but that's what I'm talking about. So you'll be able to, I know that person is going to be moving their way up, going up the scale, so to speak. So they may be starting at a lower amount now, but they're only going to increase that amount. So again, if you want to get into real estate investing, definitely have 2 or 3 people if it's a smaller amount and you guys all come to the table together. Not saying you're putting your money together, but you're just putting your hey man, we have 4 deals over here, or we got 5 deals over here, and you can use that to your advantage. Now, the interest rates on the fix and flip stuff, they're not going to be traditional interest rates. Traditional interest rates now is going to be about 4%, 3.5%, anywhere from 3.5% to about 4.5%. We're talking about fix and flip stuff. You're talking about 10% to, I would say, about us 10% to 12%. Certain people go up to 15%, 16%, but we're trying to bring our rates a little bit under the national average. So that 10%, that's going to be depending on your state, because certain states you have to lend on a little bit of a lower interest rate, but traditionally 10% is going to be like 1% under the national average. Right now, the national average is about 11%. So we'll give you the 10% because again, we're dying for the fix and flip business. Like we're dying for it. And you can get that money in 7 days. So I have like a little chart here, but we'll kind of go through like a process, so to speak, on, okay, Ryan, you know, you're driving around Philly, music's blasting, you're feeling good. Your house that you want to buy, you're like, you know, oh, the house looks like, you know, it looks like something that I could fix up, something that I can make some money on. So you look at it, find out the price. They're like, okay, price is the 100,000, like we said. You go there, we let you know, okay, you got to put the 10% down. So let's say the house is on auction. So you go there, you drive past the house, you like it. They're like, hey, the house is on auction, so come back for the auction. So you don't got to go to the auction with all your money. They give you a couple of days at most auctions. So you go to the auction, you're like, you know what, this house is 30, 40,000. Auction starts going up. You win the bid at 100,000. The next step for that, right after that, is you're going to send me the address of the property. I'm going to send an appraiser out there to determine the value. Once I find out the value, I'm like, okay, this is what we're working with. These are the repairs that we need to do. So then after that, you're going to get with your contractor. You're going to email me all the work that you're getting done to the house. Detailed estimate. Yo, I'm going to put 50,000 into it. This is what everything's going to cost. And I send you the wire within that week. So once you send me what's called a scope of work, that's going to let us know exactly what you're doing for the property. Once you send us your 10% down payment, once all that money clears, we get your scope of work, we do the appraisal. After that, I would say if you start on Monday, by next Monday, you'll have your money to get everything started. So the process, of course, is a little bit more in detail, but there's only like so much I can say quickly. But if you want more information on that, of course, everyone has my contact information, but that's like the gist of it. You see the house you want on auction, you know that, okay, I'm going to need a minimum of 10% down. So make sure you have your 10%. If you have 5,000, don't go bidding on houses that's 300,000. Just stay within your budget. Okay, I have 10% down, so I'm good. Once you have your down payment, then you're good to go. Make sure you get your scope of work with your contractor. So I don't know who people have contractors. I have contractors in New York, but again, it's out of state. Tap into your network. Reach out to other contractors. If you don't know anyone, Angie's List, find somebody, but you can go on Angie's List. They have kind of recommendations from there. If you don't know anyone, they have real estate software that people use to kind of give them repairs. I have the same software, so if you're bringing a deal to me, then I'll kind of go over all the specs with everything for you, and I can kind of let you know how much money you're going to make on the deal. Because if you're going to bring me a deal and you're only going to make $1,000 on it, then I'm going to tell you, let's not do the deal. There's no money. There's money in it for me because I'm lending you the money and I'm going to get paid regardless. But for you, there's no money in it. So I'm going to tell you're going to give me the scope of work, and I'm kind of going to put everything in there: real estate costs, lawyers costs, all the fees associated. If we have to hold a property for a month or two, what that's going to cost. So you have a best case scenario, I'm going to net X. A worst case scenario, I'm going to net Y. So at least you know what's going on. You're not just buying a property blind, so to speak. So I have all the software. I have everything that you need to kind of get started. If you are ready to get started, I can walk you through the entire process. Once you say, okay, I saw a couple properties on auction, let's go through them. Let's see how much money I can make on this one. And I can kind of walk you through everything that you need and, how much money it's really going to cost. But I would say if you 10% down and you can get into the fix and flip stuff with 10% down. And of course, as you flip more properties, the interest rates get better. So I have like a diamond package. If you flip, over 15 properties, then the rates are at, 8%. So when you're talking about getting, hard money or quick money, so to speak, at 8%, it's not happening. It's unheard of.
Yeah.
It's not going to happen. But if you're an expert in the game, you're like, yo, I do this for a living. Look at my portfolio. Look at my tax returns. Now, not looking at your tax returns to see how much money you claim, but how much money you brought in. I don't care if you show zero, but if you say you have $1 million in receipts and I know you're doing things, I don't need to see that you paid the IRS $1 million, but I want to see what you're working with. You can't say, hey, man, I flipped 100 houses and then you send me your bank statement, you have $5,000 in there. Yeah. It just doesn't, the story doesn't add up.
Exactly.
So, the story has to make sense. And once everything adds up, you'll be right on your way. So rates are going to be anywhere from 10% to 8%, depending on how much experience you have. So, yeah, you got to get started. So if you start now, by the time you flip a couple houses, now you can kind of dictate your own terms. You can say, Kareem, you're telling me 10%, but I have 5 other properties I'm about to flip. You got to come down on an interest rate. And I have a decision to make now. What am I going to do? Am I going to say, no, I don't want those 5 flips? Or am I going to say, you know what? All right, man, I'll take a little bit less on this one because I know it's going to add up. And then plus, I'm going to need you to send over your other people as well. So those other investors that you're working with, because when you're a real estate investor, you guys, they hang out with each other. Real estate investors know other real estate investors, just like money people or financial people, your network, they all hang out together. So they're going to know another person that wants to get something done. That's just how life is. You kind of gravitate towards other people that are doing what you're doing. If you're a bum, then your other friends, they're bums as well, because then they wouldn't hang out with you. They'd be like, you know what, man, we kind of want to do things. We want to get into investing. We want to go to a free seminar. And then your other friends like, oh, nah, I'm not doing that. I just want to chill at the house. Or, yo, the Giants are playing at 1 o'clock. So that seminar's at 2. I can't go because I got to watch the Giants. So you'll just doing that, you'll kind of know, who to keep in your circle, who to keep out of your circle. So, yeah, that's pretty much it.
All right, well, thank you for dropping so many jewels. Y'all watching, this was like $100,000 worth of jewels.
You know what we have to do next time? We have to, this was like an intro. We got to do something where it's like a specific topic. Because I do a lot of seminars, I do a lot of things. And then, people are like, hey, man, you didn't talk about this, or, you didn't really get too much in depth. And I'm like, the mortgage guideline book is like 1,000 pages. I'm not even exaggerating that. That shit is 1,000 pages on one program. And we got 30 programs. So for me to really get into the intricate, I couldn't do that if we're doing an intro. So we got to come back and do like something specific about like qualifying for a multifamily property, or qualifying with, a little bit of money so I can get specific into the grants or get specific into multifamily properties. So how to get a mortgage if you're self-employed. So I can talk about the specific self-employed programs. So we have to do something talking about specific topics. This was kind of like an intro to get everybody's feet wet about make sure you sign up for the school because this is the information that's going to be in the school. So it's very important that you sign up for it. I don't know how much it is, but if they told me it was $1,000 a month, it's worth signing up because people are paying $3,000 a month for training, $4,000 a month for training, $5,000 a month for training. So I know I have people that do my Facebook ads and they're charging me $1,000 just to make the ad. And I'm like, damn, that's a lot.
The brother I know, his name is Terry. I think he charges $1,000 the minimum.
Yeah, to make the ad. That you still gotta pay for the Facebook money. That the ad is so. You gotta invest in yourself. Was basically the bottom line is you have to invest in yourself because who else is gonna invest in you if you're not investing in yourself? So
exactly.
Let's come back. Let's do something.
We're definitely going to do that. Matter of fact, we're going to set that up. We're going to do an actual real webinar.
Yes.
The PowerPoint slides that we're going to screen share and we're going to pick a specific topic. It's going to be like Drake, like the digital summit or something like that, whatever. And we're going to do it all online webinar. I'll create a webinar, link where y'all can go and sign up. This is for people that are serious, and we'll go over a specific topic, and then we'll bring out the screen shares, the PowerPoint slides.
Money wise, I'm talking about dollars. So I have the charts, how much money you need realistically, how to get the money, where it's going to come from, friends and family, how to structure your bank statements when you're buying a house. So there's so many other things that are involved that we have to do a specific class on, how to bring your documents to the bank, what the underwriters are looking for, what they're not looking for, how to kind of skate between the lines, so to speak, all within legal remedies, of course, but kind of how to play, the other side, the secrets of the industry, so to speak. But for that, there's so many that we would need like a 10-week course to kind of break it down because there's just so much. It's just too much information. It's a lot. There's no way for me to say, but it's just a lot of information, a lot.
So we're definitely going to set that up as soon as
we got to do that. We got to
get on live Facebook. We're going to talk for a few minutes before you get back to your busy day. Before we wrap, let everybody know, give your your business information. You gave your cell out so people can text you.
Yeah, I'll give the cell out. Text me.
Give people all your information, how they can contact you if they want to contact you. Somebody, if you're watching too, please type his website in the chat. Somebody type it down there when he drops it.
Yeah, so the website is inthenowmortgage.com. So you go on there, you can kind of fill out a contact form, and I'll contact you on there. inthenowmortgage.com. You can send me a text and just say, hey, Kareem, what's up, man? I want to get some more information. Whatever it is, text me, 631-394-7640, 631-394-7640. I'm on Facebook. Kareem Baldwin's my full name. My profile's public. So.
Looks like we lost him for a second. I hope he comes right back in. Okay, well, Kareem, he may come back in for the end of this session, but if he doesn't, I hope y'all got that information. I'm going to call him on his phone. So he dropped like thousands and thousands and thousands of dollars worth of information. So I please hope you guys are taking heed. Please contact him. He just texted me. He said he's about to put his laptop charger back in. So he'll be coming in just to drop the rest of his information in a second. Thank you guys for typing the information down, Angelique and DeAndrea. Thank you so much. So he's going to come right back in. Now, like I said, please, I hope you're taking heed to this information. I love to bring people by that actually know their shit. You can see by far, Kareem definitely knows his shit. He is a very, very, very intelligent brother, and he's coming through to drop the jewels on the community because he cares about us. There's a lot of people out here that, go into corporate America, go in these mortgage broker spaces and all that, and they forget about the community. People try to come to them for a mortgage or get information from them, and they don't want to give jewels. They don't want to give information. They want you to figure things out. I don't rock with people like that. If you know people like that, stay far away from people like that. I don't rock with people like that. I rock with people that have information, have resources, have years and years worth of experience, and they want to share it with you because they just want to help. They want to help you. Of course, he wants to get more clients in, but he is not just about money. It's not just about money. I'm pretty sure he does well. I'm pretty sure he has a great living, great standard of living. But he just wants to help people and provide information that most people probably don't think about. Most people aren't thinking about the grants and all the different information when they go in to buy a property. Most of us, especially black folks, when we get approved for a mortgage or whatever, we're about to buy a house, we're just so happy, myself included. We're just so excited that, oh, I'm about to get this house. I'm about to be a homeowner. I ain't got to deal with no landlord. I can rent it out. You know what I mean? I can do my own thing. It's my own property. We're not thinking about all the other ways to capitalize, all the other ways to make money for this grant program or that grant program. You also said about if you have an LLC, if you have a business, all the advantages for paying things like your bills and expenses through your business. So then when we look at your personal credit statement or your personal income, we're not going to look at that because those are business expenses. So when you look at your personal statement, it looks like you don't have any expenses. You don't have any bills. So you're not at risk to not pay your mortgage because we know you don't have a lot of bills. You don't have a lot of expenses because it's all through a separate entity when you structure it under a legitimate business, when you structure it under an LLC. So I hope all this information was helpful to y'all. If you haven't shared already, please share. Please share on Facebook, Instagram, YouTube, Twitter, on your Facebook group, wherever you're at. Just please share. Please share this information. If you want to follow me on other platforms, I'm on Instagram. Follow me at myownboss87. myownboss87. Kareem just came back in. I'm going to bring him back in so he can give the rest of his information. Go.
Yeah, I'm back.
Okay, great.
So yeah, I'm doing, I'm not even taking my own advice. I'm telling everyone to be prepared, and I don't even have my laptop charged. So
yeah, you good.
Telling everyone be prepared, make sure you do your research. And I don't even have my laptop charged, but it's charging now, so I'm ready to rock. But all right, so let me give my information again. InTheKnowMortgage.com. You can go fill out a contact form, get back to you within 24 hours. Or you can send me a text message, 631-394-7640, 631-394-7640. Also, you can add me on Facebook, send me a message. My profile's public, so you can follow me on Instagram every day. On Instagram, 3 times a day, I'm pumping out mortgage content, real estate content. So if you just follow the Instagram and go on the page, you'll pretty much get content that way as well. But of course, I have my email list, bunch of lists, emails. I have books to send out. So if you want any of the information that we're talking about here, just email me. I'll send you my first-time home buyers guide. I'll send you my renter secret book that I just wrote. So email me or text me, send me a message on Facebook, follow me on Instagram, send me a DM, and I will, we'll work together. Let's build. Let me get you some money. So the funding's there. I have the funding. It's just, who's going to take it. So also on that fix and flip stuff, that's up to $2 million. So, we can do up to $2 million on that.
Okay. All right, great. So everybody that was watching, like he said, we're definitely going to bring him back. We're going to get something together. We're going to actually do an actual real class, real webinar. We can really lay out information. He has his table and how much you need, everything. We definitely going to bring him back. I'm about to talk to him for a few more minutes when we get off live. So again, he dropped all his information. Thank you, everybody who typed in the website. They typed in your number. He gave y'all thousands and thousands of dollars worth of jewels. If you do come in on the replay, drop a comment. Let us know that you watched it on the replay. Please feel free to share. Please feel free to subscribe. Please feel free to reach out directly to this brother and just take advantage of all the opportunities that exist.
The information is there. So
information is there. So
hit me up, everyone. Call me. That's it.
Make sure y'all take advantage. You don't have to be in New York. You can be out of state. You can be, anywhere in the country.
All 50 states. Yeah.
All 50 states. Just make sure you reach out. Make sure you take advantage of this information.